Hey everybody, welcome to the Head Startup. On today's video, I want to take you through a tutorial on how to trade stock warrants on Degiro. I've noticed recently that there's very little material even on the Degiro website about this kind of thing. So if anybody wants to learn about how to do it, then this might be the video for you. One quick disclaimer is these stock warrants are very high risk, high reward kind of instruments. So they're not really for complete beginners. Stock warrants operate in a very similar way to options, so for this video I'm going to assume that you have some sort of basic grasp of how options work. So here is what I am going to actually cover in this video. I'll go through the terms of stock warrants on Degiro and how they are settled, and I will also take you through what the ratio of a stock warrant is. This is also sometimes called the multiplier. This is a very key concept to understand so you actually know how much you're actually buying. Then I will take you through a practical example on Degiro for a Tesla stock warrant. As part of this, I will show you how to calculate profits and losses on stock warrants. This is very important to understand because you need to be able to calculate what the break-even point is where you start making a profit. But I'll explain all that later, so let's get straight to it. So firstly, why would you want to trade with warrants at all? So there's three common reasons why you might want to use them. So the first one is to just trade with leverage. The second one is to speculate on the price of an asset. And thirdly, you can use them to hedge against certain risks. So now I'm going to talk a little bit about how they work in theory. When you invest in a warrant, you are getting the right to buy or sell a specific amount of stock at a specific price within a specified deadline. This sounds very like an option, doesn't it? Well, there's only a few small differences between warrants and options. One of them is, say, options are actually traded on exchange like the CBOE, whereas warrants are actually issued by financial institutions like banks. There are a few more small key differences, but you will see these as I explain further. I think the easiest way to explain how warrants work is to look at a specific product. So firstly, on Degiro, if you want to find these products, just simply go to the following products page and they will be all listed under the warrant section. So I've picked this Tesla call warrant to explain exactly how they work. So firstly, you need to understand the difference between a call and a put. So a call gives you the right to buy the underlying stock, and a put gives you the right to sell the underlying stock. So you would buy a call in times when you think the stock price is going to increase, and you would buy a put in times when you think the stock price is going to decrease. Right, next let's go through the name of the warrant itself and explain what each part of the name actually means. A call, as I was saying, gives you a right to buy a specific amount of Tesla stock at a specific strike price, and the strike price is 800, which you will see in the latter part of the name. So the strike price will always be a part of the name. The last part of the name here is the expiration date, which is the 21st of January 2022. What this basically means is you can exercise this warrant up until that expiration date. By exercising, I mean exercising your right to buy a certain amount of Tesla stock at that strike price of $800. This type of warrant is an American style warrant which allows you to exercise your right at any date up until the expiration date, but certain warrants may be the European style which only allows you to exercise them at the expiration date and the expiration date only. So you will only be able to exercise any warrant when it's in the money. In the money basically means when the warrant is in a profitable position. So for the Tesla warrant I was looking at there, the strike price is 800. So when the actual price of Tesla becomes 800 or more, this starts to become in the money. So if the actual market price of Tesla goes to 900 or so, that's great because you have the right to buy the Tesla stock at the price of $800. So you will be able to buy your stock for $800 and sell it to the person on the open market then for $900 and cash in that difference between the two of $100. You'll see this more clearly when I go through the practical example shortly. An important thing to note also is how these warrants are settled. When you exercise your warrant, although I said earlier on this gives you the right to buy the underlying stock of Tesla at a specified price, what happens with the warrants on Degiro is they're actually cash settled. So when you exercise your warrant, you will receive a cash amount that equals the profits. This Tesla warrant had a strike price of $800. So if the actual Tesla price is $900, and you exercise your warrant, what you will receive is a $100 difference between the 800 and the 900. So you won't actually go and buy Tesla stock at the price of 800 and then have to go and sell it on the open market for 900. The last important thing you need to know before I go through my practical example is how the multiplier effect works. This is also called the ratio of the warrant. The ratio or multiplier of a warrant tells you for each warrant that you buy, how much of the underlying stock does this entitle you to. So for the Tesla warrant we have been talking about, the ratio of this is actually 100. What this means in practical terms is you will have to buy 100 warrants to be able to have the right to buy one of the underlying stock. The price of this warrant at the time I was recording the video is $128. So if I want to buy the right to purchase one stock of Tesla at a price of $800 anytime between now and the 21st of January 2022, I will need to buy 100 warrants at a price of $128 each, so this will cost me €128. Okay, so I hope everybody is still with me, and I think we're ready now to go and have a look at the practical example, so this should clear up any questions that you might have from the previous stuff I've talked about. If you are looking for any information on the warrants that are available on Degiro, there should be a key information document available for each one. On this key information document, you will be able to see things like, you should be able to see the multiplier, which I was talking about previously, also the fees that apply, and the financial institution that is actually issuing it. And there's lots of other useful information to help you get to understand how the product actually works. So for my practical example here, I'm going to talk about two different investors here, so you can compare and contrast their two different situations. So one investor, John, decides to just buy one Tesla stock, and the price at that time was $750. So he's just buying a regular stock. So our next investor, Mark, wants to use stock warrants. So he decided to buy some call warrants at a strike price there of 1,000. And the expiry date on the warrant was the 17th of September 2021. So in order for Mark to be able to buy one whole stock of Tesla at a price of 1,000, he needed to buy 100 call warrants. This is because the ratio of this stock warrant was 0.01. So he bought 100 call warrants at the price of 39 cents per call warrant. So 100 of these call warrants would then have cost him €39, but I've converted it back to US dollars. So that works out as $45 there. So let's have a look at Mark's position in a little bit more detail. So before Mark bought this, you would have calculated his break-even point. So this is the point where the Tesla price needs to go to in order for him to actually start making a profit. So the break-even point will always equal your strike price plus the premium cost. So the premium cost there, as I was saying, was $45, and the strike price is $1,000. So if the Tesla price goes above $1,045, Mark is making a profit. So now let's have a look at two specific scenarios of what the price actually went to. So let's say in scenario one, the price goes to $1,200 per one stock of Tesla. So John, having bought his stock at $750, now has a value of $1,200. So he's making a profit of $450 at the moment, and this is a 60% profit he has made on his investment. And now let's compare it to Mark, who bought the stock warrants. So the strike price, as we were saying above, was 1,000, and now the value of the stock has gone to 2,000. So he has a redemption amount, which is the difference between the value and the strike, is 200, but he also had to pay out his warrant cost, which was $45. So overall, he is making a profit of $155. And this $155 is made off an initial investment of $45. So he is making a return of 344%. So this is the leverage really at work here. So you're really investing a small amount of money in to get exposure to making larger profits. Okay, now scenario two, the Tesla price actually only goes to $900 by September 21. So John, in this situation, has still made a profit. He bought Tesla stock there at $750, and the value is now $900. So he's making a profit of €150, but now he's only making a 20% return. So now let's have a look at Mark's situation. His strike price is still $1,000, and the value of this Tesla stock is at $900. So he's not going to exercise his warrant. So why would you go and buy a Tesla stock at a price of $1,000 when you can go and buy it on the market for $900? So his redemption amount in that case is 0, and that means he makes a loss of 45, which was the initial cost that he paid for the warrants. So the most that he can lose is his initial investment of $45 into the warrant cost. So in this case, the warrant has expired worthless, and he has made 100% loss. So as you can see from the two different scenarios, the stock warrants are definitely a lot more risky. You can make much higher returns, but you can also lose your 100% of your investment very easily also. So it's a lot riskier than it is than buying just your regular stocks. I hope now after that example you are clear on how stock warrants actually work. If you do have any questions, please don't be afraid to leave them in the comments, and I will try and get to them. The price you actually pay for a warrant will vary constantly depending on a number of variables, such as the price of the underlying stock, the level of volatility and the time until expiry. So obviously the more time that you have until expiry, the more likely it's going to enter into a profitable position. Thanks very much for watching. I hope you enjoyed the video and found it useful, and if you did, I would really appreciate it if you subscribe to my channel and like the video.